last Tuesday, we talked about there's impulsive down move and then weak rally. And also it failed to overcome one half of this bearish commitment bar to the downside. That is a bearish sign. We discussed about the analog here and this analog. We compare the current pullback to 1, 2, 3. This is a lot worse than 2 and worse than 1 in terms of the volatility. This is volatile. Look at all these big spread bearish candle compared to all these candles. In terms of volatility, is a lot worse. In terms of the supply level, there is huge increase of the supply. The supply level is very high compared to the past. This is a supply level in the past, but here we have spike of the supply and a lot higher. In terms of the speed to the downside, it took around a month to reach this magnitude. Another month reach this magnitude. Another month reach this magnitude. But look at this. It only took less than a month to reach this magnitude. In terms of the speed to the downside, it's a lot worse. We talk about these three things. First is the volatility is very high in the current pullback. Second is the volume. Volume has been increasing, supply has been increasing. The third is the speed to the downside. The speed to the downside is also increasing for the current pullback. This is not constructive to the bull. We use the price range to do the projection, roughly around 11%. And then we compare to the current pullback. Based on the characteristics of the current pullback compared to the past, the magnitude should be bigger, if not at least on par. That will be about 51. So yesterday there's a shadow going to about 51.20. The first target has been fulfilled, but the bearish characteristics is a lot worse than here and also here. I anticipate a more significant pullback than the past. Means that it should be more than 1%. The next support level will be around K. That will be around 12.5%. Based on this 3 days intensive down move, that can be considered as a selling climax, and also with a climatic volume, climatic price action. Yesterday there was demand. So look at the tail. The demand already in is up to the aggressive buyers, how they want to scoop up the stocks, whether they see the value or whether they are intraday traders. The first resistance will be the gap. This should be the first level that it need to hit. Even if it hits the first level, it's still considered as very weak, because this is the breakdown level and it could go all the way to test the axis line and then coming back down. If it fails to reach the high or even this line about 53.75, is likely going to have more downside. So either way, we could see more weakness as based on the increase the volume. James said when the VIX goes high, it is time to buy. Yes or no? Well, it depends on your plan. When the VIX goes high, means there is increase in the volatility. The market is under selling pressure. The VIX might spike to 64, 65. We haven't seen this kind of spike for quite some time. So once we have the spike of the VIX, although it's only intraday, it will take time to settle down. Back to your question, if you are a long-term position trader, then it could be the opportunity to buy at a support level. Then you could look at the different support levels. So for example, the long-term trend is still up. So this is still routing. This is breaking out, going up, and have a deep pullback with increasing of the supply. We could see more weakness ahead, up to 5K. The second target for S&P is around 5K, and we still need to judge the characteristic. If the volatility high, it could only take 1 day to reach 5K. And last Tuesday, we also discussed the S&P has the right to pull back way to 4,800 without damaging the bullish structure. If there is a pullback going all the way back to 40, and it could still bouncing up from there to form another trading range, then it's still good. Now there's a few levels below. So the first level already hit is about 51.50. Second level, that is around from third level will be around 4,800. The real bearish moment comes in here. When we have the breakout to the upside on Wednesday, this is great, but this is very short-lived. In next day's break back down. So this is considered a failure bar. It comes with increasing of the supply. As of yesterday, there is this climatic bar with a demand tail show up. Today, let's see whether we'll have an attempt to rally filling up the gap. This few days will be quite crucial because whenever we have selling climax, we only want to see some quality relief rally. This is getting more volatile and more intensive with the increasing of the volume. So that's why it will take more time for it to settle down. And 5,000 is the next meaningful support level that you could anticipate. The swing direction is still going down. Pretty immediate direction, like today, tomorrow, I anticipate some kind of the relief rally like to climb back up to test the high of this bar or even here. So we have well-defined, well-established up channel. So although it's broken, so it doesn't mean that it's going to crash down. It means there is a pause in this uptrend. So at least going into a sideways movement. Since it's considered oversold, we could at least attempt to rally. There could be more weakness to come just by judging as the price action and also the supply level.